Hello, it's John Turner, the head of Global Mining Group at Fasken, reporting from somewhere in cottage country. Welcome to our International Mining and Investments and Developments webinar series. For those of you who aren't as familiar with the firm, Fasken is a firm of over 750 lawyers with offices in Canada, the UK, South Africa, and China. And we are going to call on our partners who are familiar in all those regions today in the panel. So I think we'll have an excellent discussion led by Paul Fornazzari discussing Latin America. He's got a host of experience there. Michael Boehm giving us an update on China, and people, I'm sure, with the host of recent deals with TMAC and Guyana Goldfields by Chinese buyers will want to hear about national security, among other things. And we have some updates on the challenges of getting out of lockdown in South Africa from our Johannesburg office, and then followed by some excellent discussions on streams and royalties and dispute resolution. But without any further ado, I'll pass it on to Alison and Lacy, who is hosting this seminar. Thank you.
Thanks very much, John, and welcome to all. This is our third session in our International Mining webinar series, and we're delighted to have you all here. We took a look through the registration list, and I'm delighted to see a lot of our friends from near and far joining us today, so welcome. We'll go through the list of presentations we've done already. We've done current issues facing Canadian mining and mine financing in the current environment. Those materials are already available on our website if you weren't able to attend today's session. And then we have two more coming up on the next 2 Mondays, critical issues or critical minerals, supply chains for clean technology next Monday, and key ESG issues facing the mining industry on June 29th. We'd love to have you join us for the next couple sessions. And you can hit the link below and join us there. Next slide, please. So today, John's given us a run through of what we're going to see. We had one switch today. Brian Graves is joining us in lieu of Guy Winter, and he will address streaming and royalty financing. And we thought for the session today, we were going back and forth on ideas on this one. And what we've seen over the last few months, mining is being treated as an essential service in some jurisdictions and continuing without any stop. But in other jurisdictions, we've seen mines put on care and maintenance, operations suspended. So now we're seeing a lot more economies starting to open up. Things are starting to happen. We thought it'd be interesting to hear from our colleagues what's happening in the mining space in various parts of the world. And as we all know, miners are an optimistic and resilient group. So there is some good news and there are opportunities out there. I'm going to turn it over to Paul to start with on the Latin American update.
Hi everybody, it's Paul Fornazzari, partner with the Fasken's mining group, and we're pleased to be here with everybody. I'm going to cover Latin American generally, and then I'll chat very briefly about the main mining jurisdictions down there. I think the three general trends for the region are as follows. I think pretty obvious: operations and licensing, including public consultations, have been delayed due to COVID. Another trend we're seeing is that particularly the big mining companies are clearly demonstrating their benefit to local communities and countries during the pandemic, through local support for medical undertakings, employment, continuing and keeping employees safe, and obviously creating a stable tax base for governments to pay for all of what's going on. And the third kind of related trend is that governments are vocally showing their support for big mining as they see that employees are being taken care of, and that they're really going to have to pay for all of this, medical health work that's being done, and so they're looking to the main industries to pay for that. I think region by region, what I did was I reached out to some of my friends down there, ask them what's going on, and I'll just give you a highlight, starting with Peru, where it's been total quarantine since March, and it'll supposedly end on June 30th if they don't extend it. Big mining has been exempted, but only in respect to critical operations. And there's been some diverse application of that definition of critical operations. Some mines have completely shut down, while others have continued as is in normal course. But all of these companies need to comply with strict health safety protocols and have reporting obligations to the government. June 5th, medium and smaller mines could start operations again with pre-approved safety plans. You may have heard about the Antamina situation where they reported 210 COVID cases in April, and they have now resumed operations quite quickly with very strict implementation of health protocols. And I guess that goes towards that trend where big mining is kind of leading the charge on dealing with COVID. The expectation from some of the mining locals in Peru is that government will push for reactivation of big projects, even in the face of some local opposition, as the governments look for employment and tax revenues. Projects that were mentioned in my discussions were Conga and Tia Maria, for example. Moving to Colombia, there they declared a health emergency until August 31. Mining is exempted. Initially, there was a question as to whether exploration was covered by the exemption, and it has been clarified that yes, so exploration can continue. The government has implemented a number of safety requirements where you've got to work with established health safety plans. Mining registrations online continue, but payments and work commitments and those kinds of things have been extended. Again, the expectation is that government will push for community acceptances of various big projects, such as Quebradona project, and the Shanties project, and Gramalote project. In Argentina, President Fernandez, when he took office, announced that mining and oil and gas were going to be priorities for the government. And I think now it's almost more of a focus on mining, given that oil and gas has suffered a downturn, and therefore the Argentinian Vaca Muerta region is probably not very active. The other interesting element is that the Fernandez, being part of the Peronista party, is very much aligned now with most, if not all, of the provincial governments, which for the most part are Peronistas, particularly with respect to the mining regions. So there's alignment from a political party perspective between the mining provinces and the federal government, and the expectation is that that is going to make the promotion of mining a little easier than it could have been. There's been a strict quarantine since March 20th. Again, mining has been exempted, so it continues. One of the big topics that was mentioned to me in regards to Argentina is that they're again renegotiating their foreign debt, and economic instability or lack thereof will arise depending on how that process unfolds. So if they're able to renegotiate their debt without a lot of disruption, perhaps foreign investment will get comfortable in pushing forward some of the big projects like Agua Rica, Jose Maria, or El Pechon. Brazil, President Bolsonaro has downplayed the pandemic. as you probably all know, so mining has continued in Brazil. And while mining has a pretty bad reputation in Brazil generally, given the Brumadinho dam disaster, on the other hand, I'm hearing that given that operating costs are extremely low in that region, there is some tire kicking going on. The big overarching issue in Brazil right now in respect to mining is the scope of the mining code reforms that are coming, particularly what will be classified as indigenous lands, and therefore what new areas will open up for mining. Turning to Chile, my home region, mining continues, notwithstanding the COVID-related obstacles. There's been a curfew imposed, and non-essential workers need to work from home. The mining industry, given that it's really big mining that happens in Chile for the most part, have adopted very strict safety protocols that have resulted in low incidence of COVID. Stats are they've had 125 cases in a 200,000 person workforce. And these safety protocols are being adopted by Ecuador, I've been told, given that they've been well thought out and seem to be working. The mining industry in Chile has financed a lot of medical assistance in the region, for example, in Pimes, where it's the most affected area in Chile. The big pending issue in Chile, I think, as most of you perhaps know, is the changes to the constitution that have arisen given all the demonstrations and unrest. The big concerns are the likely changes to the royalty rates. They're saying taxes and royalty rates may go up, and that water rights and social licensing are going to be even tougher. However, when you speak to government officials, they see mining, as they always have, as a lifeblood, very central to the economy, and they need mining to pay for all the changes coming. So they are going to be very keen on supporting mining where they can. Mexico, mining, along with many of the industries, completely stopped until May 18th. Now mining is deemed an essential service and can operate provided a health safety plan is approved by health authorities. Uncertainty continues for new projects due to the current political climate. As a big item that's going on in Mexico right now is the new free trade agreement with the EU, which is in the process of being ratified. And then on the mining side, lack of security in certain key areas continues to be a big concern. Ecuador, total quarantine since March 16th. They've had a curfew from 2 p.m. to 5 p.m. every day, which seems really tough, but now slowly opening up with strict limitations. Mining was, from the beginning, designated strategic. However, many projects stopped until recently. I think one of the big ongoing issues in Ecuador would be the social opposition to mining in various regions. And then quickly, I'll touch on Guyana and Bolivia. Guyana is a very hot region right now, given it's the Guyana gold area there. Guyana Goldfields was just put into play, and there's been a lot of junior and investment into the region. And lastly, Bolivia, not a mining hotbed for a long time, but there is some sense that things could change if September 6th elections coming up put a more pro-economy, right-wing government into place. That's it. I will turn it back to Alison. Thank you.
Thanks very much, Paul. That was great. One housekeeping matter I failed to mention at the beginning. At the bottom of everyone's screen, there is a Q&A. So if you do have questions, please feel free to submit those, and we will do questions and answers at the end. So on to our next speaker, Michael Boehm from our Ottawa office. Michael will speak to us about deals and developments in China. Michael, over to you.
Thanks, Alison. Good day, everybody. Next slide, please. We'd like to start off telling you a little bit about Fasken's China group, and who's the source of passing on this information, and just to show how active we are in the space. We have over 50 members of our firm across all of our offices who are involved in our China group, including a Beijing office. We've got lawyers that speak Mandarin and Cantonese and can communicate quite freely and easily with our clients there. And several of our lawyers are actually former top Chinese law firm practitioners who've joined Fasken for family reasons a lot of time in our various offices. They've moved out of China. And of course, our lawyer in China, Lei Huang, he has been with one of the top Chinese law firms before joining us as well. Next slide, please. Again, just to show a little bit about our background, we've represented over 40 Chinese national and provincial mining SOEs. Last time I checked, we were the only Canadian firm that's ranked by Chambers Global for Chinese outbound mining. We've completed transactions all over the world, 6 of the 7 continents. And, if you want a list of all the different transactions that we've worked on, you can go into individual lawyers' bios at Fasken, as well as on Fasken.com. We've got a China group page, and we've got a China deal list on our website as well. Many, many different transactions over the last 15 years. Next slide, please. And a lot of the transactions that we are involved with are significant transactions, not just the routine transactions. So, for example, we acted on the very first Chinese SOE hostile takeover bid on the TSX. And, last week we worked on the second, this time for the target, on the Guyana Goldfields Zijin transaction. We did the very first Chinese SOE national security review over 10 years ago. We acted on the very first and only that I'm aware of Chinese proxy battle for control of a TSX-listed mining company. And we've been involved in the largest Chinese SOE mine build in Canada with the Canadian Royalties mine in northern Quebec, a $1.6 billion nickel, copper, palladium mine. Next slide, please. And so I thought I'd talk about some of the recent mining deals that have been announced out of China over the last 6 months or so. Next slide, please. Back in December, our friends at Zijin Mining announced that they were going to buy Continental Gold, a small-scale gold producer out of Colombia, bonanza grades, and their advanced construction in their project there. All cash transaction. Fasken was on for Continental on that transaction. Next slide, please. A few days later, we saw that Jiangxi Copper had announced that they'd bought an 18% equity stake in Fasken client First Quantum. This is a little bit of an unusual transaction. Maybe 10 years ago, we saw Chinese companies taking minority equity stakes in targets. We're seeing less and less of that, but this is a transaction where we saw a minority equity position taken within the last 6 months. Next slide, please. We have a lithium deal that was announced with Ganfeng Lithium, taking control of the Lithium Americas project. They'd had an earlier investment, and this was a top-up. In this transaction, we saw the increase in equity teamed up with a loan as well. So a bit of a joint venture related project topped up with a loan in the lithium space. So we're seeing battery metal transactions lately as well. Next slide. And then just over a month ago, we saw another deal that I think is going to be somewhat unusual going forward. We saw Shandong Gold announce their deal to take over TMAC Resources in Canada's north. Why I say it's unusual is with the trade dispute going on between China and Canada, there's going to be less and less direct foreign investment in Canadian companies or Canada-based assets. If you're a mining company listed on the TSX, and that's basically your only connection to Canada, your assets are in South America or Africa, I don't foresee much of a problem, but I think there's going to be less and less investment into Canadian-based assets. But this is, a very high-grade advanced project in Canada's north, all cash bid again. We were involved in that transaction as well. Next slide, please. And then just last week, it was announced that our friends at Zijin Mining went ahead and secured the support of Guyana Goldfields board for a friendly transaction. Again, a gold producer in South America, all cash transaction. Next slide, please. On LinkedIn, I every time there's a press release that goes out on a Chinese outbound mining transaction, I make sure to put it up on my LinkedIn feed. A lot of people don't have dedicated information for these different Chinese investments in mining, but if you send me a LinkedIn invitation, I'm happy to connect you to my LinkedIn page, and you can get the information there. Over the last 5 years or so, Fasken's been involved on one side or the other of at least 2/3 of the Chinese outbound mining transactions involving TSX-listed companies. So we're very active in the space and happy to keep passing on information there. Next slide, please. Some of the recent developments we'll have seen, next slide, please, is, as Paul just mentioned, a lot of these countries are on lockdown. So it's tough for the Chinese technical teams to go travel to the mine sites or check out the resources on a first-hand basis. That's slowing down auction processes we're seeing. This article talks about doing M&A and due diligence by Zoom. Sometimes that works, sometimes it doesn't. It depends a lot of times if these Chinese companies have in-country teams or teams that have recently visited or other resources. What we're seeing sometimes is they'll use local consultants to try to help move things along. Next slide, please. Definitely the biggest recent development we've seen is a lot of countries around the world are, because of COVID-19, protecting their resources. And they're making it much more difficult for Chinese state-owned acquirers to pick up assets on sale. And so we're seeing that here in Canada. Next slide, please. United States, of course. I'd be very surprised to see any mining transactions involving assets in the United States anytime soon. Next slide, please. We're seeing it in Japan. Next slide, please. We're seeing it in Germany. Next slide, please. Australia is getting their fair share of it right now. Next slide, please. There's rumors that China's not going to be purchasing a lot of Australian metallurgical coal going forward as retaliation for recent Australian political activities. Next slide, please. But a lot of this that we're seeing in North America is justified on the basis of, we want to keep the Chinese out of strategic metals, battery metals, etc., which I find a little bit odd when the largest of the Chinese lithium companies is itself struggling financially. There's been a big pullback in lithium prices over the last couple of years. So to say lithium assets need protection commercially, it doesn't seem reasonable to me, but that's what we're seeing anyway in the market. Next slide, please. This just goes to the Americans looking to protect and invest in their strategic minerals. Next slide, please. Lastly, what we're seeing is distressed M&A opportunities. So Typically, I would say Chinese investments are very favorable if you've got mining assets in Africa, in South America, in gold, battery metals, copper, or mature assets. What we're not going to see too much of, I don't think, is in North America, any assets in North America, Australia, or early stage assets. The exception to that being distressed M&A. If there are mining assets on sale, we're going to see our Chinese friends at those auctions. Thank you.
Thanks very much, Michael. Our next session will be with our Johannesburg colleagues, Godfrey, Malesa, and Mmaphuti Morolong, and they will be addressing navigating the lockdown in South Africa. So Mmaphuti will speak first, followed by Godfrey. Over to you, Mmaphuti.
Thanks, Alison. Next slide, please. From a South African perspective, if we can move on to the next slide. In response to the pandemic, the South African government published regulations which provided that all business which were not rendering essential services were to be shut down. Specific to mining, gold refinery, and coal mining were permitted, but this was permitted at reduced capacity. For mining was also permitted for PGM processing in relation to the production of medical products, and this was also at limited capacity. Any mining that did not fall within the permitted services were then required to be placed under care and maintenance or to be shut down completely. Please move on to the next slide. A couple of weeks into the lockdown, all mining operations were then permitted to resume, but they were permitted to resume at 50% capacity. Of course, over and above the concerns around the time that it would take to start up operations and the amount of money it would cost, at the center of it all was health and safety. And so as a condition to resuming mining operations, all mining companies were required to put in place measures which would ensure the mitigation of the spread of COVID-19. Now, with South Africa having about 500,000 mine workers, about 30,000 of these individuals have returned to work. And since they've returned to work, about 679 cases have been confirmed at mines. As just after mines were permitted to resume, just after mines were permitted to resume their operations, the Department of Mineral Resources and Energy published guidelines which made it mandatory for mining companies to put in place codes of good practice, which are essentially policies which deal with how those mines are going to ensure the mitigation of COVID-19 in the workplace. And these were to deal with, amongst others, educating employees as and when they return to work, putting in place measures around testing, screening, quarantining employees as and when it is necessary. The Department of Mineral Resources and Energy has also been conducting scheduled and unscheduled inspections at mines to ensure that mining companies are complying with those health and safety policies that have been put in place. Now, with the 679 infections, a lot of the mines have been very different in their responses to those infections. So some mines have opted to shut down their operations completely until such time that the mine has been decontaminated, while other mines have opted to shut down an element of the operation until such time that it has been decontaminated. And the response from mines in this regard has really been led by the extent of their risk, their risk assessment in relation to the contamination, and of course the procedures that they've put in place in grouping employees as and when they return to work. As we ramp up operations in South Africa, the biggest concern over and above, next to health and safety, of course, has been around ensuring that junior miners are also able to continue with operations and do not necessarily suffer or struggle due to the financial considerations. Concerns have also been raised, of course, around the extent to which mining companies are now interested in undertaking prospecting activities, and of course continuing with mining operations linked to the financial considerations that are associated with starting up mining operations, but of course prospecting activities. I'll now hand over to Godfrey, who will take us through the challenges that South Africa has faced in relation to COVID-19, as well as the takeaways from the response to COVID-19 as a whole.
Thanks, Mmaphuti. South Africa, like the rest of the world, is still trying to ascertain what the impact of the pandemic will be on the mining industry. According to the likely to fall by 8 to 10% this year due to the COVID-19 pandemic. Many companies may need to restructure their businesses to survive or to recover from the negative impacts of the lockdown, which may lead to job losses, downscaling of operations, or closure of mines because the market conditions may not be conducive enough. What we have seen is that according to the South African Department of Mineral Resources and Energy, many of the companies were going through the process of downscaling their operations before the COVID-19 pandemic, and the situation may escalate post the COVID-19 pandemic. And also small operators who are struggling even before the COVID-19 may not survive the post-pandemic. And it's likely that new projects as well as potential investment may be delayed indefinitely or cancelled completely. And this is likely going to lead to potential massive job losses. While there's not been a massive scale of exploration and prospecting in South Africa prior to the COVID-19 pandemic, this is likely to worsen now post the COVID. So it's likely that there's going to be less prospecting in South Africa due to the impact of the pandemic. Next slide, please. And in response, the South African government has come up with a few economic interventions, and these include, among others, industrialization. The government is looking to ramp up local beneficiation of commodities. They will be doing this by looking at secondary industries beyond the mining industry, and these industries can then absorb workers who may lose their jobs because of the COVID-19 pandemic. So the plan here is to ensure that exported commodities are to be beneficiated locally in terms of the end product. They're also looking at ramping up beneficiation through reduction of input costs for smelters and fabricators. There's also been a proposal to request for temporary VAT exemption on imports for gold, precious metals, and diamond industry destined for beneficiation. The government is also looking at fast-tracking complying applications for transfer of mining rights to create additional jobs and save existing jobs. And they're also looking to financially assist small and junior miners to restart their operations. And they will do this through a fund called the Small Scale Mining Fund. And there's also been a proposal that the government will ensure that the supply of electricity is stable to the mining industry, and they will do this by implementing short-term negotiated pricing agreements for the mining sector. And they're also looking at utilizing an interest portion of what we call the Rehabilitation Trust Fund to fund mining operations in distress in order to save jobs, and also to fund any new mining operations. Next slide, please. And I think if we look at the future of the mining industry in South Africa, it's very clear that the mining companies will have to now live with COVID-19, which has become the new normal now in the mining industry. And this includes mining companies making sure that they comply with the mining mine and healthy regulations. And also, from the South African government, the biggest takeaway is that the government is definitely looking to take advantage of the economic stimulus opportunities presented by the pandemic. And they will do this by trying to increase South Africa's value chain by developing secondary industries. And this will be done through beneficiation of commodities. And if one looks at, depending on how long this crisis lasts, the mining industry could see big moves into autonomous mining technologies in the not so distant future. So we are looking to see if mining companies will start relying more on technology and trying to reduce the impact of the COVID-19. And also what we've seen that most major mining companies now are moving to greater levels of collaboration between mining, especially where issues of health are concerned. And this is going to ensure that South Africa tries to save as many jobs as possible in the mining industry. Thank you. Over to you, Alison.
Thanks, Godfrey and Mmaphuti. Next up, we have Brian Graves from our Toronto office. As I said, he's stepping in for Guy Winter. We had a switch in people last week due to some scheduling issues. And Brian is going to speak to us on metal streaming and royalty financing. And I can vouch that he's one of the busiest guys in the office right now. So over to you, Brian.
Thanks very much, Alison, and hello, everyone. I wanted to cover today a few recent developments in the streaming and royalty financing world. But before I do that, most of you, I'm sure, will be familiar with royalties as a form of financing. For those who are a little less familiar with stream financing transactions, I thought I'd point out a few things that you need to know. A stream contract is effectively a kind of a hybrid between an offtake agreement, a royalty financing, and a credit facility. Fundamentally, it's a long-term contract for the purchase of a specific metal from a project, usually a percentage of production from time to time. And by long-term, I mean typically it's a life of mine contract, and the stated terms of a lot of these contracts are 25 or 40 years. Unlike an offtake, however, the purchase price is paid in two ways. Initially, there's a significant upfront cash deposit that is paid, and that gives rise to the financing element of the transaction. And then as metal is delivered over time, then there's an additional cash payment made on a per ounce basis or a per pound of metal delivered basis that's equal to a modest percentage of the spot price of that metal. Typically somewhere in the neighborhood of 15 to 25% of the spot price. Other than that, the terms of these contracts tend to be very bespoke. They're highly tailored to a project's particular circumstances. The operating covenants of a stream are typically light compared to a credit facility, but they may contain some debt-like elements in the form of events of default and remedies that flow from those. And they may or may not include security or other debt-like lender protections. So with that as kind of a background or a prologue, I'd like to talk about some recent developments in the streaming space, and they really fall into four categories. I'll chat a little bit about the structure of sales processes as they're now conducted for streams. I'll talk a bit about the asset mix of streams that are in the market. In the world we currently live, no presentation on recent developments would be complete without something on the impact of COVID-19 on streams and royalties, so I'll touch on that. And I can also report a bit on some changes in the participants in royalty and streaming transactions. So first off, structure of sales processes. More and more royalties and stream financings are being run as competitive auction processes. If you were to go back a number of years, you used to see a variety of approaches being adopted by companies who were interested in doing streams and royalties. Some were done as really one-on-one discussions between a company and the streamer. not so much on a comparison shopping basis. Some sellers, conversely, would run a kind of a soft process of discussions with several streamers or royalty companies before settling on a counterparty. And a handful ran a more formal process. Currently, though, as a result of developments in the market, most processes are now run in a manner very similar to a formal M&A sales process. So often you'll see financial advisors being engaged. They will approach multiple potential bidders with a confidential information memorandum around the project. They'll run an auction, and they'll maintain a focus on keeping deadlines met and maintaining competitive tension. And we've actually seen financial advisors add a tremendous amount of value in these contexts, in these sorts of transactions. But interestingly, unlike in M&A, where quite often the initial indicative bids that a target might receive from a few front-running bidders are quite close together. And it's a case of nudging bidders to differentiate themselves from the economics that are offered by a number of them in their initial bids. Because the terms of streams and royalties are much more bespoke, and there's more room for creativity on the part of bidders. Often we found there's a clear front runner out of the gate on the economics, and it's interesting the role that the financial advisors play is then trying to nudge other bidders to catch up with the front running bidder without letting the front running bidder necessarily know that they're the front runner. So it's an interesting dynamic that can develop in these transactions. The second topic I wanted to talk about was the asset mix of streams in the market, both in terms of metals and geography. The focus of most stream and royalty companies is still predominantly on precious metals, although there are a few royalty and streaming companies who do focus more on base metals, among them Anglo-Pacific, who have been in the market for a long time, Base Core Metals, which is a relatively recent entrant to the market, formed as a 50-50 joint venture between Glencore and the Ontario Teachers Pension Plan. And also an entity called Cobalt 27 with a focus on cobalt metal, which did a stream with Vale on their Voisey's Bay asset a couple of years ago. For royalty financings, by contrast, the terms of the deals are most often net smelter return royalties on all metals. So the distinction between precious and base metals is a little bit less acute in the market, but the economics are still fundamentally driven most often by the precious metals. In terms of geography of the projects that are streamed, the focus of most streaming and royalties is still on assets in the Americas. Streaming, as you may know, originated in North America, and most of the larger stream royalty companies are based in North America. And as a result, there's a tendency for them to focus on assets a little closer to home here in North America and in Latin America. In the last couple of years, we've seen a few substantial streams done on assets in Africa or by African-based producers. These include Joburg-based Sibanye Gold's $500 million stream on gold and palladium on its Stillwater mine in Montana. A private company, Cupric Canyon, has done in the last year a $250 million silver stream on its Khoemacau project in Botswana. That was part of a comprehensive construction financing that included both debt and private equity. And late last year, Triple Flag, also another Canadian-based company, bought a platinum stream from RB Plats on its complex in South Africa. So increasing levels of activity in Africa. In terms of what impact COVID-19 has had on the streaming and royalty market, as you might have expected, the number of actual completed stream and royalty deals has slowed a little since the onset of the COVID pandemic. A bright spot within the last month or so was the SolGold royalty financing on its Cascabel property in Ecuador. But other than that, it's been relatively quiet in the market, which is not to say that interest has waned at all. we're aware of a number of processes that are still ongoing, but purchasers are typically cautious of uncertainty. And so the pace has slowed, and the streamers and the proponents seem to be adopting more of a wait and see attitude towards their transactions. The good news for producing companies who might be facing troubles in the COVID era is that the stream and royalty holders also seem to be taking a wait and see approach to some of their production slowdowns, care and maintenance commencements, and force majeure notices that some mines have been facing. So there's relatively few instances that we know of where streamers have been exercising, for instance, default remedies or insisting on penalties that even when they might have been entitled to them under the terms of their contracts. They're taking a long-term view by and large. Streams, as mentioned, are typically very long-term relationships, as are royalties. And for the most part, the streamers and the royalty companies are acting like good long-term financing partners with their counterparties. Lastly, I'll just comment briefly on some changes, mostly entrants in the royalty and streaming space. Many of you will know that the streaming world has traditionally been dominated by a handful of North American-based streaming companies, among them Franco-Nevada, Royal Gold, Wheaton Precious Metals, Orion, and more recently Triple Flag. Because of their size, these companies tend to now gravitate towards larger transactions because it's harder when doing a small transaction for that to move the dial for them in terms of their market capitalization. So a group of others have formed in recent years to compete on the more mid-sized transactions. These include companies like Sandstorm, Mavericks, and even more recently, EMX Royalties. In the last couple of years, very recently, we've seen a number of still newer players looking to serve a market for smaller royalty and streaming transactions. Some of the names that you may encounter in this space would be Sailfish, Metalla, Star Royalties based in Toronto, and Trident Resources based in London. And it'll be interesting to see how these companies grow and mature as they develop and these assets become streamed and subject to royalties. That's all I really wanted to get across to you today. Thanks very much. I'll turn it back to Alison.
Thanks, Brian. Great information. So our final speaker, Peter Mantas, joins us from our Ottawa office, and he's going to address resolving global mining disputes by internet arbitration. Over to you, Peter, please.
Thanks, Alison. So the title is not a reflection of us forgetting to accept changes in the draft, but it's really to focus on the fact that there is a shift from an international process to internet process or an internet-based process recently as a result of the pandemic. It is a new reality of resolving disputes to the extent that there is an arbitral process that's provided for, and in the area of mining, that is very common in order to avoid the problems you get by being in different jurisdictions or in jurisdictions where there may be issues or concerns with respect to certain judicial areas. And there are benefits, but there are also some issues, and there's some significant new issues and concerns that have arisen as a result of a virtual type process to resolving disputes. In terms of the benefits, some of them will be obvious to most people on this call. Obviously, it allows the case to proceed without risk of infection because people are all getting together in a crowded room, in a hearing room. You can also tailor the process to try to address certain problems that have arisen as a result of the pandemic, such as the movement of people that have been restricted. Also need to keep in mind that arbitral bodies are now imposing virtual hearings unless the parties have specifically said they won't do it. So absent an agreement pre-pandemic, it was unlikely to be imposed, maybe for procedural matters, maybe a few witnesses. Now, it's in a way, it's reverse, it's more likely. So what I'm going to do over the next few minutes is I'm just going to give a quick overview of some of the things you may want to be thinking about. I'm going to talk about virtual hearings, talk a little bit about evidence and witnesses, a few strategic considerations, and then wrap up with costs. So from my perspective, the two biggest issues or problems that arise with virtual hearings is first, technology. Clearly, if you're going to be arguing a case and it's going to be via the internet, you need to be tech savvy. You know, you can be the greatest advocate in a hearing room. Suddenly, you've got a game changer. You need to be able to present in a certain way. You need to have an ability and a team that's got a strong ability to be able to put forward the law and the evidence and those arguments in a way that is smooth and compelling. Hearings are starting to look less like what we've come to view as a typical courtroom hearing and a little bit more like television or a documentary. The other big issue is the loss of human interaction, and that's the one you're going to hear people talk about the most. There's something that gets lost when you're in a virtual setting like what we have here, as opposed to being face-to-face. It may not be an issue if the evidence is not contentious, but if it is being challenged, you have a problem. You've got more difficulties extracting information from your opponent, and you also have more difficulties in bringing your own case to life using your own witnesses and evidence. And after all, a good case is about telling a story that's compelling. It's not just about a bunch of technical pieces of evidence and some law. So in terms of strategic considerations, I can tell you that, you know, the kind of things that we're thinking about, and in fact have been doing it, we've done some of these already, quick out of the gate. We think about the evidence and the evidence collection. So, you know, we're working with our witnesses now to try to collect evidence that we may be able to use in a visual way in a hearing room. For example, having people pull out their iPhones and actually going to the site and filming it so that we can then use that kind of imagery in a hearing room to try to explain, you know, for example, if there's a problem at the mine site and that's resulted in litigation. We want to be able to tell that story and explain it. And with witnesses, we want to make sure that we're choosing witnesses who present well on camera. There's some people who are very uncomfortable being in front of a camera. We want to make sure that we don't, you know, we can find other witnesses if that's going to be an impediment. Also want to make sure that we've got a strong and reliable video link. One of the other things that we're checking into is whether or not our witnesses can travel, because there may in fact be a physical hearing, and we want to make sure that those witnesses can get there. And if not, we want to think about that. One of the other things that's popping up that people should be thinking about are the arbitration clauses. Most clauses typically don't address virtual hearings. That's something you should consider. There are pros and cons to doing a virtual hearing. They tend to have an advantage to one side versus the other. Not always, but they can. You want to think about that now. You want to think about it in advance. And it really depends on the situation. You know, for example, are you likely to be the person who's going to benefit by having witnesses who are presenting virtually? Those are the kind of things you want to think about. Also want to think about confidentiality. Typically, arbitrations are confidential. Lock it in. You don't want a situation where somebody jumps in, records your hearing, perhaps your opponent, and then uses that to potentially embarrass the company during protests against a mine. And finally, cost. By and large, I think the costs are neutral. You save money by travel, but you tend to spend more in terms of the time consumption taken with longer hearings. Video tends to be longer, but there's nothing as expensive as losing a case. While there may be no guarantee of winning, you want to do what you can with this new paradigm to try to increase your chances of winning or alternatively settling on good terms. Thank you.
Thanks very much, Peter. Again, it's time for our Q&A, and please feel free to submit a question in the chat feature below. In the meantime, we've had a few questions come in, and I'll start with a few. The first one I think will be directed for you, Michael Boehm. Anecdotally and generally speaking, to protect confidentiality, can you give us a sense of your activity levels you are seeing from China in your own practice in terms of Chinese outbound mining interest and what metals, et cetera, that may be?
Sure. Thanks, Alison, and thank you for the question. So, typically every year around Chinese New Year, we see, which tends to be the end of January, beginning of February, we tend to see activity drop off quite sharply while everyone goes away for their holidays in China. And then when they come back, there's usually a very sharp bounce back. But this year, of course, with COVID-19, the bounce back was delayed. So I would say probably the end of March, things started picking up again. Here, that's when we were just in the thick of it, but in China, they were starting to recover at that point. And every week, it's been picking up since. It's been getting busier and busier, more and more inquiries. So the activity levels are actually really good coming out of China. A lot of participation in auctions, a bunch of our clients in exclusivity right now. So really good activity levels. In terms of the metals that they're interested in, it's primarily gold, primarily lithium, and primarily copper. Those would be the big three. Outside of that, we see a little bit of sort of a spattering amongst other metals, but that's definitely where the concentration is.
Great, thank you. Peter, a few questions for you have come in. First one, how do you deal with the risk of hackers breaking into a virtual arbitration process?
Well, so that's a great question. Obviously, there's a technical component to that, but from a legal perspective, this reinforces the importance of trying to have a good relationship with your opposing counsel and thinking and talking about these things, making sure that steps are taken to try to create a secure link. Theoretically, both sides should be able to agree to that. If your opponent is reticent on that, that's probably a sign that you've got a potential problem. You may have your opponent, for example, depending on the nature of the case, may actually be quite happy to see people hack into it and then post sensitive evidence and sensitive information that arises during the case online, which can be clearly a catastrophe, or information that might go public. So work with your opponent, and if your opponent won't agree, well, then make sure that you got your tech consultants, your experts, and go before the arbitrator. It's unlikely that an arbitrator is not going to agree to very stringent security measures to protect what goes on in that hearing.
Thank you. And Paul, over to you. First of all, we had a comment come in from Fernando Aguirre in Bolivia that briefly on Bolivia, March 20th was their lockdown and operations suspended, and they have restarted as of this month. So just wanted to raise that. And then a question for you, Paul. Which countries in Latin America will see their mining industry return to normal fastest? What are your views on that?
Yeah, I think generally speaking, I see countries like Chile and Peru quickly returning to full capacity. I think mostly because the majors are there and they've got the resources and the vested interest to quickly adopt very strict health protocols. For example, Antamina, which I mentioned in Peru, had 210 odd cases, and they have quickly dealt with that and are back with very strict protocols. I think those are the examples that are going to allow countries like Chile and Peru to quickly get out of this. And as well, I think Peru, Chile have governments and communities for the most part that really understand the long-term benefits of mining because they've been the recipients of those benefits for much longer than, for example, Ecuador and Colombia. Also, places like Brazil, where the president has at first said there wasn't COVID and then downplaying it. So I think mining has continued unabated there.
Thank you. And for our South African colleagues, for Godfrey and Mmaphuti, COVID-19 has had a big impact on the mining industry. What are the major effects you're seeing on the South African mining industry?
Thanks, Alison. Well, it's still too early to fully understand the full impact of COVID-19, but one of the impact in South Africa is going to be that the mining production is going to fall this year, which will have a major impact on the South African economy. And mining companies that were already struggling before the COVID-19 are likely going to find it very, very difficult to recover from the pandemic. And one of the things that people are most concerned about is job losses, and that is something that the industry is trying to have very hard to try and prevent that. So I think we will know better once towards the end of the year what the full impact it has been on the South African mining industry. Thank you.
Thanks, Godfrey. Brian, a question related to China, but this one is for you. So has there been any participation from Chinese entity in streaming transactions?
That's a good question. China's not been a focus of streaming activity to date. I'll sort of think about it from both the seller side and the purchaser side. On the seller side, I'm not aware of any streaming transaction having been done on a mine actually located in the PRC. You know, where Chinese SOEs in particular have rights to minerals, they do tend to hang on to them, and they'll do their financing in other ways. I'm aware of the occasional process where a Chinese entity has considered a stream on an asset located offshore, but those are pretty few and far between. On the purchaser side, there's no major repeat streaming player located in the PRC based there. There's one entity that's associated with a major Chinese mining company, and the entity is called Resource Finance Works. They did a stream about 5 years ago with Banro on their Twangizig mine in the Congo, and they participated in a number of other processes looking at various things, but they, from my knowledge, but that's the only streaming entity based in or around the PRC or associated with Chinese entities that I've seen active in the space.
Okay, interesting, yeah. Peter, another question for you. Are there recognized standards for virtual arbitration hearings?
Short answer is no, but there are, we certainly have a checklist. We've actually published something online. One of my colleagues has done it on checklists. There are starting to arise sort of best practices that council are starting to agree to on how to, you know, how to do these things. I mean, for example, you know, what we like to do is early in the process, we like to reach out to our opponent, try to develop a good rapport, and then start going through some of the technical issues. If we're going to do a virtual hearing, you know, how far is it going to extend? Is it going to be the whole thing? Most lawyers I deal with don't like that. We right now are, the arbitrations I'm involved in right now, we're saying, let's wait and see what we'll do with respect to the hearing, but let's see what we can do to set up a process before that where we can keep the things going and exchange things electronically, find ways to, for example, get around the need for taking an oath face-to-face because we're all socially isolating. So there are things that are being driven by the practicalities of the world we live in right now, and you know, a lot of lawyers haven't really thought that much about it, but you know, there are checklists that are starting to pop up, and that's helping.
Great, thank you. Paul, another question for you. Which countries do you see in Latin America where mining investment is gravitating to?
I think each jurisdiction has its pretty significant challenges, but the geological riches of the area are such that mining companies can't stay away. In terms of challenges, Chile, it's got, as I mentioned, the constitutional reform. Argentina has political and fiscal instability issues. Brazil and Peru, there's political issues, Colombia and Ecuador. There's a lot of community opposition to mining. But I think, again, Peru and Chile being really the historically, the historical mining jurisdictions, very established. The majors are there. There's a long track record. Mining's been the lifeblood of Chile and Peru for, call it 100 years. So I think those jurisdictions will continue to attract investment. Colombia and Ecuador, the government has been, both governments have been pushing mining agenda for a long, not for a long time, but in recent times. But those are new industries, and there's a lot of growing pains in those jurisdictions. But again, they're very rich in gold and other minerals, so worth the efforts. Guyana, as I mentioned, is the flavor of the month, or maybe longer. And Argentina, you're seeing the start of a lithium wave again, the third lithium wave, I would call it. Demand out of China in particular is starting to outpace supply. Supply was shut down around the world, really. Expansion plans were all shut down with the lithium price dropping. But now you're seeing the demand side continue to grow. For example, CATL, I don't know people in the lithium business, but the CATL may have seen, people in the lithium business may have seen that CATL has come out with their LFP battery, which uses lithium. They call it the 1 million mile battery. It's half the price to build, and it's very safe. So Tesla is going to use that battery from CATL in their Model 3. And Tesla's expanding in the UK, Germany, gigafactories in China, etc. So demand is growing. CATL said that they've got 50,000 tons of lithium carbonate kind of locked up in contracts, but to supply the Tesla batteries that they just signed a contract for, they need another 100,000 tons of lithium carbonate. So they need to grow their supply by 2/3. So this is all the stuff that's going to generate excitement again on the supply side, and I think Argentina is going to be the biggest beneficiary of that.
Great. We've had a question come in from Manuel Tagle in Chile. In general terms, under current conditions, have you seen an aggressive approach from investors seeking investment opportunities actively in mining, or a wait-and-see approach? Maybe Michael Boehm or Godfrey or Brian could take that one, or all of you.
Sure, it's Michael. I'm happy to jump in from a Chinese perspective. Early on, there were valuation gaps as COVID-19 evolved and the markets reacted. There were large valuation gaps, as you would expect. And so I wouldn't say anybody's rushing in, but I also would say that nobody's walked away. Everybody's still at the table talking. So we're seeing good interest and good activity levels from China.
Great. Godfrey, do you want to make any comments from South Africa?
Yes, thanks, Alison. From a South African perspective, we haven't seen any aggressive investment in the market yet, and it's of the view that potential investments is likely going to be delayed indefinitely or cancelled completely due to the COVID-19. So we don't expect to see a lot of investment in the industry at the moment. Thanks.
Alison, I can comment. From what I've seen, the kind of early adopters, the entrepreneurs in the mining space are very active, looking for good gold projects. So that tends to lead to a bit of a move in the market. So I think a gold wave is coming for sure, with the early adopters coming in, bringing to market new projects or recycled projects, and investors riding their coattails.
Okay, thank you. One more question for South Africa, for Godfrey or Mmaphuti. With the South African government having eased lockdown restrictions on mining operations, what legal measures have been put in place to ensure that mining companies maintain the safety and well-being of their employees in the face of possible subsequent waves of infection?
Thanks, Alison.
Thanks.
So and Godfrey can
Go ahead,
supplement. Thanks, Godfrey. So from a South African perspective, as indicated earlier, the Department of Mineral Resources and Energy has made it mandatory for all mining companies to put in place policies regarding curbing COVID-19 at mines. And this is, once it's developed, once the code of practice is developed, it must be lodged with the Department of Mineral Resources and Energy. So over and above those policies, the inspections, of course, from time to time that are implemented by the Department of Mineral Resources and Energy are also the kind of measures that South Africa has put in place to make sure that mining companies are complying with the health and safety requirements under COVID-19. Godfrey, I don't know if you wanted to add to this.
Thanks, Mmaphuti. I think you've covered most of it. Just one thing is that a contravention of these guidelines and regulations will constitute a criminal offense. So that's something that might deter mining companies from not complying with the regulations and guidelines. Thanks.
Okay, one more question from Andrew McSkimming. Do you have insights into tackling the problem of jurisdictions or departments that don't say no to a permit application, but just won't decide after, for example, 24 months? Paul or Michael, maybe you could give some insight into that from what you've seen in your areas?
Yeah, that happens quite a bit. I saw it in Colombia where they shut down applications for years. It's tricky. I think you've got to have really good people on the ground. Legal lobby efforts are essential to get government attention to you. You never know what's going on in the background, so you've just got to be talking to them all the time. You hear about these people not looking at your file until they get that, bribe offer. That can happen. That's the trickiest thing. Obviously, you cannot bribe them. So you've just got to find ways to put kind of legal, political pressure on these functionaries.
Okay, thanks. Michael, did you want to weigh in on that one as well?
No, that's fine. I think Paul covered that off pretty well. I don't think I have anything to add. Thank you.
Okay. This is an interesting question that's just come in from Charles Beale. Regarding Investment Canada Act approvals and the recent policy statement on foreign investment review and COVID-19, any instances of transactions by an SOE that have not passed a security review? I'm not sure who can answer that one.
Hi, Alison, it's Michael. I'm happy to jump in there. I'm not aware of any, recently, of course, on April 18th, there was updated guidance on national security reviews, looking at critical infrastructure items. It's a little bit broad and general. Right now, the Shandong Gold TMAC transaction is being reviewed. But that's the only one that we know of publicly. That's a transaction that's been announced by a Chinese SOE since the April 18th update to the regulations. So we're waiting and seeing on that one, but I don't know of any that have been refused up to this point.
Okay, thanks very much. That comes to the end of our questions. We haven't had any more come in. So a couple housekeeping matters before we finish. First of all, we've presented a lot of information today with questions and with our speakers. So please feel free to reach out to any of the speakers directly if you've got follow-up questions. Also, our materials will be available online shortly. And a reminder of our 2 upcoming programs next Monday on critical mineral supply chains for clean technology, and the following Monday on June 29th on ESG. And we would also really appreciate it if you could complete the survey on the session. It's at the bottom of your page, a link. And we'd like to really thank you for attending today. And I really hope we see you all live in the not too distant future. So again, thanks very much for your time. And hopefully we see you at the next couple sessions. Thank you.